Hey everyone, welcome back to the channel. Today, I want to talk about something a little bit different, but tell you about the time that I turned $1,000 into $10,000 and tell you how you can do the same thing. Now, this isn't a get rich quick scam. You're not going to see these gains overnight. That's just simply not the case. But I will tell you exactly what I did and what you can do as well to see significant returns in your portfolio. And honestly, it's not that exciting. If you're expecting, to create overnight returns, this probably isn't the video for you. I'm not here to tell you to go buy some lottery tickets or Bitcoin or some NFTs, but rather talk about a pretty simple but consistent approach to making money. Let me rewind back to the summer of 2013. So I was in my senior year of college studying finance, and I started researching stocks in my free time and had a little bit of money to work with to make some investments. I had something around $2,000 at the time that could be deployed. I pulled together a DCF on Apple and I thought, this looks like a great company. I should put some money in it. I ended up buying 2 shares of stock at the time. The stock was trading at around $500 a share. Today, the stock trades at $150 a share. However, in that time period, there's been a 7-for-1 and a 4-for-1 stock split. So those 2 shares I originally bought for $1,000 today is 56 shares, and they're worth just a little under $9,000 or a little over $9,000. Now, in that period, I also received $300 in dividends, but I chose to reinvest those back into Apple itself. So that $300 in dividends today is actually about 5 shares of stock and worth a little over $750 as well. So those dividends alone have also doubled in value for me over the last 9 years. So that $1,000 investment 9 years ago is worth $10,000 today. Now, I understand that my position in Apple was incredibly lucky, slightly informed, probably naively informed at the time decision. And, at the time, Apple was a good company, but who would have guessed it would have went on to become the world's largest company? Not me, probably not anyone. And I admit there's a bit of a luck in that investment. But that doesn't matter. We have actually something not as good, but of an alternative that we can invest in. And it's the S&P 500. So if we take a quick look at that same period over the last 9 years, $1,000 investment in the S&P would have yielded me a $3,000 return today. There's not going to be many safer investments in the stock market that I could have made in that same nine-year period with that good of a return. That would have been without any luck involved. All I had to do was sit back, put my money in the S&P, let it do its thing, and voila, today I would have $3,000. So historically, the S&P has returned around 10% before inflation. And with a 10% annual return, it takes actually just about 7 years to double your money. So if you're 20 years old and you put $100 into the S&P every month until the time you're 30, when you go to retire at 60, that $12,000 you put into the stock market would be worth $400,000. Now, if you adjusted that for inflation, it would be still an impressive $155,000 at the time of retirement. That $12,000 investment would give you a hefty 12 times return, and you didn't have to do anything, right? You just had an auto deduction from your paycheck going into your Vanguard or whatever brokerage account and auto investing in the S&P. When you go to retire, you're going to have a pretty good sum of money. Now, that wonderful thing, it's compound interest. It's not a secret. Warren Buffett calls it the seventh wonder of the world. And, if you have enough time, you will become rich doing this. Imagine if you could put $1,000 a month from the time you're 20 until the time you're 30. That'd be $120,000 over the course of a decade. But when you go to retire at 60, it'd be worth about $4 million before inflation, or about $1.6 million in today's dollars. So while yes, $1,000 a month may seem like a lot when you're 20, by the time you're 30, it's going to be a little bit less, assuming you have some decent career progression, and it's going to set you up to retire very nicely. Now, I think this is kind of an important thing, though, is you have to set your mindset to think about it this way. That's something I've done. Every dollar that I could spend today, I think about what it would be worth in 30 years when I go to retire at 60. After inflation, that $1 is worth about $10, assuming about a 7% adjusted return for inflation. So it's not a get-rich-quick scam. It's actually quite the opposite. It's a get-rich-slow plan. And I think Warren Buffett's actually the best example of this. I think when we look at business tycoons in America, we tend to see the very quick rise of business titans. If we look at like the Mark Zuckerbergs, the Bill Gates, the Elon Musk, it almost feels like overnight these people in their 20s just become millionaires or billionaires. And as a society, we tend to fixate on that. But if we look at Warren Buffett, he actually wasn't even a millionaire until he was, I think, 33 years old. It took him a little under a decade from launching his Berkshire Hathaway fund. And he actually wasn't a billionaire until he was 55. It took him 33 years to become a billionaire. And from the time he was 55 till today, I think he's 90 or 91, that $1 billion has actually grown to $120 billion. And this is actually the reality for most people that achieve kind of financial success. It's actually a lot more of this slow and steady grind than it is this overnight wealth accretion. Now, I know it's easy to talk about this, but in reality, it's pretty hard for a lot of people to do this. And it's something you have to truly work on. The rise of social media hasn't helped anything. It's made it hard, if anything, harder. You go on forums like Wall Street Bets and you see people overnight make $100,000 when they're 19 years old. You want to do the same thing, so you do the same YOLO. It doesn't pay off. There's a lot more people who are going to lose that 100K overnight than make it. The reality is, right, meme stocks, crypto, influencers, all of this, we see it, we get FOMO, we think like that could have been us, and then we chase the next thing. When in reality, if you just do the slow and steady, that is the next thing. Just slowly, invest in the market continuously. Don't worry about timing the market. This is something I see a lot, right? It's time in the market, not timing the market. Everyone wants to wait for the market correction. I remember reading a lot online, the market correction of COVID, people like, it's going to keep going lower and lower and lower. So they didn't buy in. And then all of a sudden the market was higher again than it was pre-COVID, and they completely missed their chance to enter. It's better to be in the market and then try to time the market. The longer the money is in the market, the more time it'll have to work for you. Great example of this. If you invest $100 at 20, when you go to retire at 60, it'll be worth about $1,600 adjusted for inflation. So a 16 times return. Whereas if you invest that same $100 at the age of 30, just 10 years later, it'll only be worth $800 at the time of retirement. So you're literally losing out on half the value by sitting on the $100 for a decade. So I know the strategy is slow. It takes time, but it does pay off. I've been doing this since I was in my early 20s. Apple isn't the only great investment I've made. I also have a very boring 401k that's invested in the S&P 500. When I look at it, my actual gains are actually larger than the contributions I've made to my retirement account. So it is pretty significant. Once the gains start growing and growing, they start to compound on themselves. I wouldn't consider myself rich by any means, but someday I will be. When I'm 60, I'll look like those Instagram influencers flexing on people. But it does take a significant amount of time to create this wealth. It is slow and steady, but with the right mindset, I think anyone can do this. And it's, not this crazy secret. It's right there in front of us. It just takes some discipline, and give it a few decades and you'll get there. But anyways, thanks for watching. Hope you found this interesting or useful. If you have any questions, please feel free to leave them below.